Munir Capital here from Cloud9 Academy, and today I'll be going over my part 2 of what is an order block and how to trade an order block in the markets. So last video I have talked about the institutions and the market price cycle and a few things on how to identify a order block. Today is going to be quite different. In the beginning, I wanted to show you guys simply just chart work, but today I'll be talking about the principles and approach you need to keep in mind before stepping onto the charts. This will give you a much more clear perspective and awareness in the markets in comparison to the rest of the market participants. So I encourage you guys to actually write some notes in terms of the principles and approach that I'm about to lay down here. So in terms of the video, we're going to go ahead and talk about the principles and then the approach. Identifying an order block, very similar to our last video, how I was talking about the base, extension, and penetration and so on, kind of a little glimpse of the whole schematic. But today I'm going to be talking about identifying an order block while also doing top-down analysis. So I'll be providing a 3-step process, but I'm not going to go ahead and ruin that for you guys. I hope you guys stay put throughout the whole video so that you can write notes and really digest the information. And then of course I'll finish it off with some live backtesting, of course, because I know you guys love that, and I know you guys want to see proof of this strategy or concept actually working. So I'm going to go ahead and randomize the charts later on and just show you guys exactly what I've just taught. So in terms of principles, this is very important. This is important because it'll set beliefs and values before we actually step into the charts, so that we can come in with a different perspective with the help of our subconscious mind. So the very first principle that I'd like to lay down here is retail speculators do not move price. So as you guys may see online, there's a lot of ambiguous information portraying all these different type of patterns and different type of tools that you can use, and it really just shiny object syndrome. And all these things that you're adding onto the charts simply do not help you, because the institutions do not even know they exist. And if the institutions do not know these random things exist, there's no way you can really move the markets, because they're the ones that have enough capital to move the markets. Even though all retail traders, say a city of retail traders, go ahead and come in together and trade one pattern and put in all their money together on that pattern, that still wouldn't move the markets, and it would never illustrate that on the charts for you here. So you guys need to understand that retail speculators do not move the markets. Next one is lines are subjective in the markets. They do not move price as well. I see a lot of retail traders on YouTube, Instagram, Twitter, even on TradingView, putting on these trend lines underneath trend channels and all these things, although they work in terms from a broader perspective. Like if you were trying to target some liquidity underneath a certain zone, then that makes sense. But if you were trying to use a line from 2018 or a trend line, or like 3 trend lines on the 1 minute time frame, for example, it's not going to work, because those lines do not move the markets. There can be anybody who's willing to just short and break that trend line that you have put your stop loss under. The use of harmonic patterns do not work as well. Although harmonic pattern and cipher patterns have the same mathematics as Fibonacci's and stuff, they do not work. Fibonacci's can work if they correlate strategically with your strategy, but if it has no correlation with any other pieces of information, then it doesn't work, as well as harmonic patterns do not work. So if you guys have these values, principles, whatever you want to call them, beliefs, before stepping into the markets, it'll be much easier for you to cut out all of what's not important and focus on what is important. So now let's go ahead and talk about the approach. Here's how we're going to be taking, this is how I'm going to be stepping onto the charts for 2022. First thing that I'd keep in mind is, if you cannot trade against the bank, you must trade with the bank. So I'm not sure if you guys are familiar with surfing, because I'm not at all, but I know a few things about that, where it is much easier to swim with the current or with the tide of the ocean instead of against it. So that I kind of bring that same idea to the market. So if you cannot swim against the tide, or say for example trade against the directional bias, then why not just trade alongside with it, because it is much easier to do so, and you can flow the instrument with the rest of the market participants as well. Next one is I strictly look for accumulation and distribution phases the markets is illustrating. So just to keep it very simple, I don't look for much when I'm stepping into the markets. I don't need to go on monthly all the way down to the 5 minute. I simply pick the time frame that's that's pretty high, but also correlates perfect with what my eye can catch. So that's, for me personally, it's the 4 hourly, and I can imagine it is the same for you guys as well. But in terms of the 4 hourly, I simply step into the markets with a clear mind, and I simply look for accumulation or distribution. So the market can move three ways. It can either move toward the upside, move toward the downside, or move in a ranging market. If it's moving in a ranging market, most likely if it's overextended towards the downside, it might mark up towards the upside, maybe towards a supply zone. If the markets is in a range but it's overextended towards a supply, then it looks like it's probably getting ready to distribute orders and mark down towards a demand zone. So it's very simple, guys. As long as you guys get the directional bias, which is the most important part of understanding technicals, then you guys took the right step towards success. Next approach that I'd like to keep in mind is understand and anticipate through detailed analysis of supply and demand, which can be ascertained from studying price action. So if you guys want to trade like institutions and approach the market like the very small minority of people, then I'd go ahead and really dissect the information of supply and demand, and not in simple forms in terms of support and resistance. I'm talking about understanding schematics, having a three-step process, adding some approaches and principles, as well as a order blocks, liquidity sweeps, and these are videos that are going to come into the academy within the next couple of weeks. So I really encourage you guys to write notes, because this information is absolutely golden. Now let's go ahead and talk about order blocks. So after institutions accumulate, distribute enough orders, price would like to push towards the opposite direction, and new high or low should form. So as you guys can see right over here, we have price in a ranging market. Since it was closer towards demand zone, it was ranging and ready to mark up towards the upside. As you guys can see, I know we can't scale down on this particular photo here on the lower time frames, because it is a screenshot on the 4 hourly, but where I have put my cursor right here, you can see that there is a higher low. This higher low before this high is the base. So we have identified the last higher low before the break of structure. So I know it's hard to identify where price has broke structure, and I will put this down on the chart, so I'll illustrate this on the chart. But you guys can see this is a higher low, and this is a breakage structure right here, and you can see this engulfing has occurred. Once this engulfing has occurred, we have identified a start of a markup. Once the start of a markup has occurred, I apologize for that. Once the start of this markup has occurred, I would like for price to actually come back to the last range that price has created before the break of structure, and I would look for an entry over there. But to break it down, I'm going to go ahead and show you what exactly I'd look for in terms of top-down analysis. So just to break this down before continuing on, we had the base, extension, penetration, and we have price marking up towards the upside. So that's simply what we learned last time, and today I'm going to be showing you guys how to put it together within the time frames. So as you guys can see, this is the 4 hourly time frame. If we ignored exactly what happened after this entry over here, we can see that price is pushing towards the downside and stepping into a range. This tells me that if price pushed towards the downside and is now ranging, we can see that price can be pushing towards the upside. And guys, on the 4 hourly time frame, one 4 hourly candle is about 16 candles on the 15-minute time frame. So if you have understood the directional bias on the higher time frames, then you can find a lot of entry schematics on the lower time frames. So Now let's go ahead and start with the directional bias, go on with the point of interest, and entry trigger. This is my 3-step process to finding a trade. So as you guys can see, we're in a ranging market, and I can see that we're ready to push towards the upside. So we are bullish. Identify the overall directional bias, which is bullish. This is the most important factor that increases the probability of you winning the next trade. So I cannot stress this enough. Directional bias is the most important. Now that we have identified the directional bias and we have identified the last higher low before the break of structure, now we simply wait for price to penetrate that last area, that last higher low. So identify, price, penetrate the zone that you identified as your supply demand zone. Well, since we are on our 4-hourly time frame, and we have identified the last higher low before the break of structure, that last higher low, which is the last down candle before the major break of structure, is our demand zone. So I've used the gone box to identify that here. Ignore this demand accumulation zone. This is simply a demand zone from the even higher time frames, the weekly time frames. So now that we have identified the penetration, you want to go ahead and look at the entry trigger. But let's go ahead and look at the point of interest section of this strategy. So strictly behavior, we are looking for strictly behavior. So once we have identified that demand zone and price has extended and we're waiting for that penetration, we're simply waiting for price action behavior type of thing. So once price betrays that last confluence, we step down to the entry trigger time frame. So once price actually penetrates our demand zone, we then go ahead and go to the lower time frames. On the 15-minute time frame, this is where we'll be entering. So we are using only 3 time frames here: 4-hourly, 1-hourly, and 15-minute. On the 15-minute time frame, this is our entry trigger, and it only involves patience. Once price finishes breaking our range, which is the penetration. So once price actually penetrates, it's going to go ahead and create a little consolidation, and then we're going to see a break of structure, a smaller one, and then it'll come back to it. So these are all wicks on the higher time frames. It is extremely hard to showcase this on the 4-hourly time frame, but if we go ahead and look at the second trade here, we can see that we have identified our supply zone. So this is directional bias, is a ranging market, and it's ready to mark down. Once we see a extension, then we see a penetration. So as soon as we see this penetration on the 15-minute time frame, we go ahead and look for price to do that exact same thing, and then we go ahead and enter the markets. So once price finishes breaking our range, we wait for a retracement to the 50% area of our range. So as you guys can see here, we have targeted the 100% area or the 0% area, however you want to look at it. So this is the 0%, and the middle part is always 50%. So here we have entered off the 0%, but here we have entered off the 50%, and here we have entered off the 0%. So it all depends on what your eye can catch and what your instincts kind of tell you in the moment. But in terms of cleaner structure, I'd like to go for 50%, but if it's looking a bit more choppy, then I'd like to go ahead and go for the 0%. It all depends on what kind of trader you are. It really doesn't matter. But other than that, that is the whole strategy from a context and information textbook point of view. There's a lot more information on the charts, and I'm gonna be so stoked to share this with you guys. So see you guys on the next clip.
Finally got to the live testing section of the video. I have been waiting for this section for the longest time. You guys don't even understand. I had to build up a few parts in order to set in stone some foundational information for you guys to actually approach the markets with a overall better awareness than the rest of the market participants. I have set in stone some principles and approach and really just beliefs so that you can come into the charts without the fear of actually having paralysis under analysis, because it is a real thing. So as you guys can see here, I have stepped back down to New Year's, in between the 28th of December 2020 and January 4th 2021. So I have started on the weekly time frame just for you guys to really see how I actually do top-down analysis starting on the higher time frames, and I don't use much levels. I don't use much levels at all. So as you guys can see, I want to identify the last low before the break of structure and the last high that price is actually gonna come towards to, which is around here for now, because it looks like it hasn't been mitigated just yet. But we can even go for something like this due to the current position we are in the markets. As you guys can see, I haven't explained this just yet, but we have an important zone from 2016 here, and I believe it's an important zone back in 2000. Yeah, we're going way too far back, but back in 2013 we have identified this demand zone right here. So as you guys can see, every time price taps this zone, we have a accumulation phase in the markets. So ever since we tapped this, we still didn't yet get to see a break of structure just yet, and this level was important for quite some time. So what I'm gonna go do is actually identify equal highs here. I like to identify where the candle closes instead of the wick on the higher time frame, due to that being where the institutions actually like to close price. So now that we actually have identified our high and our accumulation candle here on the weekly time frame, we can go ahead and actually identify a distribution candle. But due to how choppy the market is, I feel like we will break all these highs. So I'm just gonna go for this high in the current moment over here. So we can also see that there's a lot of liquidity being picked up. I know this doesn't really relate to what we're talking about here too much, but once you guys get more advanced, you'll be able to spot out the inducements. So you guys can see that there's people's stop losses here, and the market's gonna come and collect that soon. So now that I actually hop into the 4-hourly time frame and get to the good stuff, we have identified that we are in a accumulation phase in the markets. So that's why we started out at the weekly time frame. So now we have a area here in the markets that price needs to break. We have identified our base here, which is the last higher low before the break of structure, but this base is only valid up until we break structure. So let's go ahead and wait for that. So as you guys can see, we have price breaking structure. I don't care if there's wicks here. We can see that price tried to do that here back in the beginning of January, but then failed to close above vigorously. But now we can see a first break above at January 7th, 2021 at 10 o'clock. So what we're going to go ahead and do now is wait for the next candle, which is probably going to come and mitigate this zone. So what I'm going to go ahead and do is actually identify, oh my goodness, I'm going to go ahead and actually identify the demand zones simply by targeting the open and the close of the last down candle before the break of structure or leg towards the upside. So simply what we wait for here is a penetration. This is our base, this is our extension. We have a break of structure here, so I'm going to go ahead and identify that one like this. We have a break of structure, premium demand zone, and now we are simply waiting for our penetration. Perfect. So now that we see a penetration, I'm going to go ahead and actually step into the 1-hourly time frame and look at the last lower high before the penetration. So it would be this zone right here. I would like to see a change of character out of this zone, so then we can find a entry schematic on the 15-minute time frame. This is exactly what I have showed you guys in the beginning part of this video. I've showed you guys the directional bias, which is what we do in the 4-hourly time frame, and the higher low we identify. I have explained the area of interest time frame, which is the current time frame we're at right now, which is the 1-hourly time frame, and which is the point of interest that we need price to actually break structure, or we can see price actually coming down maybe towards 140.250. So what we're going to wait and do is see price come close towards this EMA and change character before looking for a schematic on the 15-minute. So as you guys can see, price did pull deeper down. So I'm going to go ahead to the 15-minute time frame because we can see a push towards the upside right away. Now that we're in the 15-minute time frame, we can see price actually look a lot more clear. We can see that this doji right here is the last lower high before the low right here. If I step into the 3-minute time frame, you guys can oh my goodness, did I really just do that? I apologize. I'm going to edit this video and you guys are simply going to go back in 1 second, but I'm going to go ahead and find that spot. Area of the market we were at earlier, and I'm going to go ahead and show you guys where we left off. So we left off at this doji right here, and something to keep in mind that is extremely important is that we're not anticipating a trade up until we see a change of character. That's how we know we are ready to mark up towards the upside and price is done accumulating. So we can see that we are in the middle of our demand zone. We have just hit equilibrium here. And if you were to be an aggressive trader, you would simply enter off of here as an aggressive entry, but I'll save this for the next video. I'm going to go ahead and show you guys exactly how to get in with a confirmation entry. So now that price actually creating a new low, we can see that we need to see a change of character out of here before actually seeing a markup towards the upside. So let's wait for the next candle. Boom. So now we can see that price actually failed to close above. Now we can see price actually close above. So what I'm going to go ahead and do is actually identify the last range before the break of structure. So what I like to do sometimes is go in a, actually go in a, what do you call it, a line chart and identify the last range like that. But I'm going to go ahead and identify these 3 candles over here. Use this part of the market to actually enter. I'm going to go ahead and go with a 10 pip stop loss, and I'm going to simply target a 1 to 10 risk reward ratio. I'm going to target this high over here at a 1 to 9. So as you guys can see, we just got triggered into the markets. We just got triggered in. We can see price actually come towards this area. So what I like to do here now is extremely important. As you guys can see, this is kind of the last supply zone really where price would like to come to before actually making a move. So I'd like to split exit right here. This is exactly where I'll split my exit for a, so if this is a 1 to 9 risk reward ratio, I closed half of my position there, we can be seeing at a 2-3% gain here if I'm closing half my position here. So that's secured 3%. So we have just made 3% here. So that's absolutely terrific. Now what we can see price doing is actually maybe come back towards our demand zone and maybe mitigate something here. But we don't want to get too technical, but we can see something like this going on. So let's go ahead and see what happens. So we see price collect this imbalance and come here, but this can be nothing but an inducement. This is why we go for confirmation and high performance entries, because if you guys see, there will be an inducement being caused here, and there always is. Well, more often than not, there is no certainty in the markets, but more often than not, there should be an inducement here, and we can actually see price tapping into this zone. If I wanted to, I'm gonna go ahead for a aggressive entry in comparison to a confirmation entry, and just show you guys the potential of the strategy and what you guys can do in the markets. So I'm gonna put my stop loss right under here. I'll go for a 15 pip stop loss, but I'm risking half of what I risked in this trade, just so we stay in profits if we lost both trades. So this is 9% and this would be about 3%. Let's go ahead and see what happens. So we can see price markup towards the upside.
and success is something which has to be earned in advance. True, there is such a thing as luck, but just remember that luck is something you can create for yourself if you know the rules and follow them just as I give them to you. Remember, too, that success in the higher brackets of achievement is something that can be had only by taking others along with you.
So as you guys can see, we have identified this inducement, and we knew that price was actually going to come and collect that. We stayed extremely patient. I could have left and ended off the video, but I decided to wait for my entry. This is an aggressive entry, as you guys can see, and you can see the potential of the strategy here. Those guys would have gotten this. So thank you guys for watching the video. I'm gonna go ahead and let you guys study all the concepts and principles. Let me know if you guys have any questions or if you guys want to see another video. But I'm gonna go ahead and end this here, and have a great day, guys.